Gold has soared past $2,100 per ounce on Monday, hitting a fresh new record. And the global rush for the yellow metal appears set to continue. Prices have now risen for 2 consecutive months, with the Israel-Palestine conflict boosting demand for the safe haven asset. Another asset considered as store of value by some, albeit less reliable, has also shot up overnight: Bitcoin. It hit $40,000, a 19-month high, and it is now up 145% since the start of the year. For more on this, now let's go to Mike Ingram, who is Senior Market Strategist at Active Trades. He joins us now from London. Thank you very much for being with us today. Mike, we know there have been serious geopolitical tensions, but apart from that, what is driving this gold rush, and why do analysts think this will continue well into 2024?
Well, there are several drivers for gold at the moment. I mean, first off, we've got dollar weakness. Dollar's off about 3% over the last month, and that's forecast to continue going into 2024 as the Fed starts to cut interest rates. And that's a driver because obviously gold is denominated in dollars. It also makes it more affordable for people who don't live in dollar areas, such as China and India, which are key consumers. GDP growth, economic growth, soft landing probably for next year. People are a bit more confident about that. That's also good for the affordability of gold. But probably the most important single driver for the gold price is that long-term real interest rates, that's interest rates adjusted for inflation, are on the way down from multi-decade highs. And as a longer-term store of wealth, as a real non-yielding asset, that's been a major driver of the gold price and likely to remain so within across the next year or so.
And I think that's interesting that these assets considered as inflation hedges actually do well when inflation subsides, not when it shoots up. I mean, I remember the argument for the Bitcoin wars at the time, especially during the pandemic, well, to hold Bitcoin so that you're hedged for when inflation will be very high post-pandemic. But then we saw actually Bitcoin falling dramatically after the pandemic.
Yeah, the relationship isn't straightforward. And I think to some extent we're comparing, as they say, apples with oranges, because when we talk about inflation, we generally talk about short-term inflation. And we talk about interest rates, we tend to talk about short-term interest rates. And what we really should be talking about, because, as I say, gold, long-term store of wealth, we should be thinking about long-term interest rates. And to preserve the wealth, we should be thinking about that adjusted for long-term inflation. And these aren't numbers which are readily available to most people and most commentators. But I can assure you it's coming from a very high level, multi-decade highs. And as real interest rates go down, then the gold price will tend to go up. And that's one of the drivers, I think, at the moment. And in terms of Bitcoin, yes, I mean, I think that's also has a similar kind of relationship. But I think it's, we don't have much data on Bitcoin. I mean, we've got hundreds of years of data on gold as a store of wealth. Bitcoin's been around since 2009. So frankly, any analysis you can have of that is probably preliminary.
Mike Ingram, thank you for your time today. And now let's go to other top stories from around the world. Turkey's exports have registered the best November figures ever, despite uncertainty over the global growth outlook. According to preliminary foreign trade data, shipments abroad surged 5.2% from a year ago to a record $28.9 billion. Meanwhile, imports fell 5.2% during the same period, resulting in a 32% drop in trade deficit. Shares in China Evergrande surged as much as 13% as it's given more time to work out a plan to restructure billions of dollars in debt. Hong Kong's High Court unexpectedly pushed back the hearing to January 29th, which would be the last before a decision is made on the winding up order. The embattled property developer, whose liabilities exceed $340 billion, is at the center of a real estate market crisis threatening the world's second largest economy. And Toyota is planning to increase its lineup of battery electric vehicles in Europe to 6 models by 2026. The world's largest car maker says it's now expecting to sell more than 250,000 such vehicles by then, which would make up about a fifth of new car sales in the region. The Japanese company is also exploring 2 investments in the UK after the government pushed back a ban on the sale of new hybrid cars.